What's up everybody, Nate here, and the Chinese economy overseas is on the verge of collapse. Right now, you have thousands, if not hundreds of thousands of people in China basically refusing to make their mortgage payments, and that is spilling out into the rest of the economy as now some real estate companies and banks are starting to fail, and many individuals are making huge runs on the banks trying to get all of their savings out, but the Chinese government is not allowing it. Just like we've seen over the last few years, the housing market in China has exploded, but now it's starting to slow down, which is causing a lot of banks to lower their interest rates to try to spark demand, but even that is not working, and this is causing a lot of consumer problems, like prices to go up for everything in the country, but wages aren't rising either. So today I want to talk about how China got here and how all of this is going to play out in 2022, because this situation is very similar to what we saw during the 2007 housing market crash, and now it looks like it's happening to China. All right, so the first thing you have to understand is housing in China has been exploding. Even before the pandemic, people really wanted houses in China. Now, this is partially because the government was kind of pushing this ideology that a house is an investment and that you basically need a house for the future of your family. So a lot of Chinese citizens got a home over the last few years, and this is not uncommon and something that we see a lot here in the States as well. The middle class typically buys a home in order to generate more wealth. That is one of the largest things that someone in the middle class is going to buy pretty much throughout their entire lifetime. So this is something that can appreciate in value and you can keep it in the family forever. So it was seen as an investment, but lately things are starting to go south. So the housing process in China works much differently than it does in the United States. Essentially, when you go to buy a home in China, you put up money up front, and that money is called pre-sale money. That's money that the real estate company is then going to use to create your home, but they're also going to use it to create a whole bunch of other homes throughout the entire country. But the big issue that China is facing right now is a lot of these real estate developers have been biting off way more than they can chew over the last couple of years. I'm sure you're familiar with the company Evergrande. Evergrande was one of the biggest and largest property owners in China, but they defaulted on their debt over the last couple of years because, well, they had way too much debt. They started to purchase way too much property, but they didn't have enough money to fund all of their pre-sales. So all of the properties that they wanted to develop on, they didn't have the money to finish them. And this is where we get into the problem that China is starting to face right now. So all of this pre-sale money is starting to dry up because when you sell a mortgage, the banks and the real estate companies are intertwined. Now, Chinese citizens are not paying their mortgages because a lot of these properties that were owned by Evergrande and a few other real estate giants are not getting made. So all of these Chinese citizens were literally paying into a mortgage and they didn't even have a house yet. So they essentially stopped, and what that is causing right now is a huge problem in the banking financial district because a lot of these banks are now getting no money. They don't have any money for any other type of loan, and they don't have any money to help secure their savings accounts. Not only that, but they can't fund any of these real estate tycoons, so all of those properties are not getting developed anymore. Now, this is a bigger problem than just the real estate market because it's starting to spill out into the general economy. Similarly to what happens in the United States, when a bank sells a mortgage, they then package a group of mortgages together called a mortgage-backed security. Now, it's a little bit different on how it functions in China, but it's very similar to the mortgage-backed security system that we have in the United States. Investors can then invest on these mortgage-backed securities, and it's seen as a pretty safe investment because people are always going to pay their mortgage because they always want to have a place to live. So there is hundreds of billions of dollars, if not trillions of dollars, locked up in these mortgage-backed securities. But if people stop paying their mortgages, then all of that investment investor liquidity suddenly disappears. The banks no longer have any of that money to use, and now all of the companies that were getting paid with that money and investors that were getting paid with that money, well, now they have no money either. So now banks and financial institutions are trying to lower their benchmark interest rates because they want people to go out and get mortgages again. They want people to once again fund the banks and fund these real estate companies, but the Chinese government over the last few years has seen this as a problem and has definitely noticed this as an issue and kind of decided to pull the band-aid off in 2021 when it said that these real estate companies and banks cannot take on this much debt. They looked at Evergrande and realized that the amount that they were bringing in revenue from all of their properties and mortgages was not nearly enough to support what they wanted to do and all of the properties and construction that they had planned throughout the entire country. So the Chinese government didn't want these real estate companies to take on so much debt, so they started to pass regulations, and when that started to happen, all of these real estate companies all of a sudden ran out of cash. That created a situation like for Evergrande where they had to liquidate, so they had to sell a lot of their profits in order to pay for all of their debt, but they weren't able to do that because a lot of their properties already had some construction on them, and a lot of other companies and people that wanted to buy them didn't want to finish those projects, so they didn't want to invest. That then caused a problem with all of your mortgage owners because all of these people who have mortgages, well, they don't want to pay because they're not getting anything out of the deal. Now, the citizens of China have decided to take it one step further, and they started to go to the banks and financial institutions where a lot of these mortgage loans are held and started to pull out all of their money. Now, the way that banking works pretty much throughout the world is through fractional lending. So how it works in the United States is you take your money and put it in a savings account. So say you have $100 and you take that $100 and give it to the bank. The bank does not hold on to this money. That is a liability. It's not actually gaining them any value. It's losing value and it's just sitting there. Plus, the bank really wouldn't make any money from just holding your money. That's completely free. So the bank actually lends this money out. They lend it out for more mortgages. They lend it out for other loans. They lend it out to other investors and financial institutions. That's their way of seeing a return on that money. They actually invest all of your money, and don't worry, if you go to the bank and try to get your money, you'll get your $100 back, but technically it's not the same $100 you put in there. Well, a similar situation is happening in China, and a lot of the citizens and the users of these banks realize that the bank works like this. So if they don't have any savings in the bank, if there's no money for these banks to use, then they have to stop giving out loans and focus on the problem at hand. And the Chinese government has jumped in again because they have started to freeze a lot of these accounts and have not allowed people to withdraw their money. And the reason China is doing this is because they say a lot of this money is part of this debt scheme because they knew that these banks and real estate companies were doing this, so they want to make sure they can track all of this money and where it came from all of these lenders and real estate firms. Not only that, but China wants to avoid a situation like the US saw during the 1920s and 30s when we had a massive run on the banks because the stock market was crashing and our economy was crashing. People wanted to go to cash because they had money in hand, and that meant that the banks essentially failed, and the banks fund a lot of our systems in the United States. There was no money coming in, so everything basically collapsed, and now China is facing a similar situation. Sales of new homes in China are about to plunge by around 30%, the lowest that they have been since 2008, right around our own housing market crash. Now, over the last couple of years, Chinese real estate prices have exploded, but now they're starting to come down as demand has dropped for homes. People don't want to invest in that right now because they don't know what the government or what these real estate companies and banks are going to do with their cash. So they're kind of riding things out and waiting and protesting even to get their money back or to just hold on to it until something changes. At the same time, though, CPI for inflation in China is starting to rise. This is all tied to things like the pandemic, supply chain issues, and food getting contaminated overseas. That poses a much bigger problem for China because as they lower their interest rates, people are naturally going to get a home regardless of everything else that's going on. And as other prices start to go up, now people are spending a lot more, which is kind of a similar situation to what we're facing here in the US, except for China is not the reserve currency. It doesn't mean though that they can't have an inflation problem, and right now inflation is starting to rise while you also have an economic slowdown. With a serious lack of spending for consumer goods and services and food and mortgages in China, well, that could start to bleed out into other markets and economies throughout the world. We rely a lot on Chinese manufacturing and on China for a lot of our debt, and if China isn't able to pay a lot of that off, or if they stop producing things, well, that's just going to make inflation here at home a whole lot worse. And reportedly, around 4,000 small lenders in China own a quarter or more of all of Chinese assets. That means that if these lenders aren't able to pay for anything, then buildings and businesses and all of these residential construction projects are basically going to stop. Everything is going to shut down in China, and that means nothing in terms of GDP can start. Like I said, that has global implications too. So unless China can kind of turn around this mortgage crisis, then that's going to be deeply rooted in a lot of other economies around the world. But now I want to hear from you on this issue. What do you think about this Chinese mortgage crisis? Do you think that this is something that is going to start bleeding into other markets, or do you think that China is going to solve this problem relatively quickly? Whatever your thoughts are, leave a comment below before you go. But that is it for today's business and financial news breakdown. Thank you so much for watching. If you want to stay up to date with all the top business and financial news from around the country, our team puts together a free daily newsletter, and you can subscribe to it by clicking the link in this corner right here. And if you want to stay up to date with me and everything else happening in the business and financial world, I'm putting out updates 7 days a week over here on this channel, and I've actually got another one ready for you right here, so be sure to check that out before you go. That is it for me, everybody. Be kind out there, and I'll see you all in the next one.